Have you ever tried explaining Bitcoin to someone like your grandma and ended up being more confused than she was? Welcome to How to Explain Crypto to Your Grandma, a guide made for both of you. I'm Brett at CryptoGX, and in this video, we'll break down step by step what cryptocurrency is, how Bitcoin's public record called a blockchain keeps it safe, where a wallet stores the secret keys that you need, why prices jump around, the common scams to avoid, and finally, whether grandma should own even a tiny bit of it in the first place. By the end, you'll walk away with clear facts, real numbers, and an easy plan to move forward, all in plain English. Let's get started. First up, let's answer the really big question. Why is crypto showing up in the news, your bank app, and now in this video? And obviously we're going to get into what it is, but obviously these headlines are a really big deal. First off, over 560 million people worldwide, about 1 in every 14 people, already own some sort of cryptocurrency, according to payment firm AAA. In the US, roughly 65 million adults hold coins, and 14% of adults that don't own crypto currently plan to in 2025. Big money is noticing too. On January 10th of 2024, the US approved the first spot Bitcoin exchange traded funds, or ETFs. And essentially this just means it's letting anyone buy Bitcoin through a regular stock account. Bitcoin even crossed $100,000 in January of 2025, showing how quickly the market can grow. So what is crypto? This is what we really need to demystify. At its heart, it's a decentralized system. And this means that no single bank or company can run the entire thing. Payments move peer-to-peer, which just means it's straight between people, and the record is kept by thousands of computers instead of one central server. Basically, each person's computer serves as part of the network rather than it being just at some company headquarters. Because of that design, money can travel worldwide 24/7, fees are very low just based on the network, and no government can simply print more coins just like they do with the dollar, causing inflation. This mix of easy access and built-in scarcity, aka the limit to the number of coins that are out there, is why many see crypto as money built for the internet age, and why you might care even if you never plan to mine a single coin. And we can talk about mining in a little bit. And with that in mind, let's see how this best known coin in the world, Bitcoin, actually runs and actually works. So think of Bitcoin as one giant online notebook, and every single page or block lists the most recent payments or transactions that are happening. About every 10 minutes, a fresh block or page of transactions is added. So the notebook keeps growing in real time. But really, who's adding these pages? This is where mining comes in. Thousands of miners, aka computers spread all across the world, are racing to solve a tough math puzzle called proof of work. And essentially what this means is there are computers out there that are processing the actual transactions that get onto that page or block. That particular computing power is what mining is and earns them a reward for doing so, aka they earn Bitcoin for processing transactions. And as you can see right here on this article on Coinbase, the processing of transactions is called a block reward, aka a page of those transactions gives you a reward. Coinbase is a great place for articles like this with information about Bitcoin and crypto, but it's also a great place to buy Bitcoin, as well as crypto.com. I'll put links to both Coinbase and crypto.com in the description. If you sign up with those links, you'll get $50 of crypto just for signing up with those links. But when it comes to processing these transactions, how does it really work and what's the goal here? Well, the first miner, when processing these transactions to find the answer to their algorithms and these tough problems, wins two different things. Number one is that they are entitled to write the next block. They are entitled to put the next page into the Bitcoin ledger or notebook. And number two is that they get the block reward paid in new Bitcoin. Currently, as of the 2024 halving, the block reward is 3.125 Bitcoin. Other computers on the network called nodes quickly check that the answer is correct. If most of the nodes agree, the block is then locked in on the record forever. Changing the earlier pages in this notebook would mean redoing every puzzle, which is practically impossible. So the record stays trustworthy and it is, as they say, locked in perpetuity. And that essentially is what is called proof of work. All of the pages in this notebook are the proof of the work that has happened, showing the record is accurate. The reward that the miners earned is the only way that new coins will appear on the Bitcoin blockchain. And the reward gets cut in half roughly every 4 years. And this basically happens based on the number of new blocks or new pages that get added to a notebook. Once 210,000 new blocks or new pages get added to the notebook, then the reward is cut in half. It typically takes about 4 years to process 210,000 blocks or pages. exchanges. This process has been nicknamed the halving. Now, this halving process is essentially a way that Bitcoin's supply is similar to gold, because as you mine more Bitcoin, it gets harder to mine, meaning you get less as a reward from it. The same thing happens with gold in the earth. The more gold is mined, the harder it is to find gold, the less gold that you find, and the less that you're rewarded with. This dwindling supply is called scarcity, and that's what brings value and increases the price of gold and subsequently Bitcoin at the same time. Because of these rules of scarcity, Bitcoin's supply, once it is fully mined, it is capped at 21 million coins. Currently, there are almost 20 million coins that are already in circulation or that have already been mined. The last little fraction of Bitcoin, based on the calculation of the number of blocks and how long it should take to mine them, should be finished by the year 2140. Now, this fixed supply plus the rising demand and interest in Bitcoin is why some people call Bitcoin digital gold, as I mentioned before. In short, Bitcoin works because math and a global network, aka not only one company running the whole thing, keeps the money moving and very scarce. So you know Bitcoin is scarce, but where do you actually keep it? Well, a crypto wallet is where you put your Bitcoin, and that is essentially a software or a small device that stores your private key. This is a secret code that proves that you own the coins. Think of this like a password, except you can't change it. And your crypto wallet has a specific address that is publicly showing on the blockchain. Others can use that to see what transactions that you have done, as well as to send you Bitcoin. Think of your wallet address kind of like your bank account and routing number, except it's only for inbound transactions, meaning they can't pull funds just by seeing your public wallet address. Now, the coins themselves stay on the blockchain. The wallet really just unlocks them when you want to move them somewhere else. Essentially, this means that the cryptocurrency that you have is shown and always existing in that notebook that we mentioned before, and you just have your private key to then open the notebook and transfer your crypto, let's say Bitcoin, from one account to another. Coinbase notes that if you lose your private key, you lose access to your money forever, because anyone with that key can move the coins around, spend them, do whatever they want with them. So if you either lose it and somebody else finds it, that could happen, or if you just lose it and you never find it again, well, then your coins are going to stay where they are forever until you find that key to be able to essentially log in and have your own access to them. Each wallet holds a pair of keys. The public key lets people send you Bitcoin, that's your wallet address, while the private key lets you sign in and send it. That's essentially like your password, which is typically a 12 or 24 word phrase that you need to write down and keep very safe. You can keep the keys yourself, which is called self-custody, or you can let an exchange guard them, which is called a custodial wallet. Essentially, think of this as something like Coinbase or crypto.com. Holding the keys on your own, especially obviously your private key, gives you full control. But hacks often target wallets or custodial services with weak security, as many recent reports on crypto thefts explain. Now, you're probably asking, is this whole system and my private key especially actually safe? Well, Bitcoin's security starts with something called cryptography, and this is essentially the use of secret math codes. Every block or page, as we mentioned before, on the Bitcoin ledger is sealed by something called the SHA-256 hash. That's not important that you know that super deep into what that is, but this is essentially a one-way function that changes completely if even one digit is edited. It's essentially a big convoluted algorithm to make fraud very easy to spot. On top of that, Bitcoin is decentralized, as we meant before, meaning no single boss or bank runs it. Every block is sealed by the SHA-256 hash. Now, it's not important that you understand deeply what this is, but essentially it is a very convoluted algorithm that protects your Bitcoin keys and is nearly impossible to hack, especially with current day's computers. You would need something like a quantum computer that is miles ahead of where quantum computers even are right now. There's lots and lots of code for this to be very impossible to unencrypt, but it also makes fraud very easy to spot. Now, within this entire Bitcoin system, roughly 18,500 independent computers, or also called nodes, are checking every transaction around the globe in 2025. If you wanted to rewrite history and change the pages of the transactions in this Bitcoin notebook and tell Bitcoin that, your account has 100 Bitcoin in it that weren't actually there before, somebody attacking this system would have to outwork all of those computers or nodes all at once, which essentially is practically impossible for anyone at this current time. The data backs this up as well. Crypto analysis finds that only 0.34% of all crypto activity in 2023 was linked to any sort of crime, which was down from 0.42% the year before. This means that the vast majority of transfers are legitimate, and the ones that are illegitimate are not them hacking the entire system. They're more like scams where people are accidentally giving access to their account when they shouldn't have. But still, like I mentioned with scams, mistakes can happen outside of the actual blockchain. These are things like phishing emails or fake applications. So guarding your private key is very, very critical. In short, with this section, the math is what's very important. The massive network and very falling crime rate shows that the blockchain itself is very, very strong. Just make sure to keep your keys safe and stay alert on potential scams and things like that. I've got plenty of videos on that, so make sure to subscribe. Even with a safe system, that doesn't mean that the price is going to stay the same. There's obviously lots of volatility in the crypto market. In March of 2024, Bitcoin set a record at the time of going above $73,000. And this was after new exchange traded funds launched. And as I mentioned before, the exchange traded funds, or ETFs, are just a way for regular stock investors to be able to invest in Bitcoin. Now, by January of 2025, Bitcoin reached about $108,000. And yet, back in 2022, Bitcoin had tumbled more than 70% from its 2021 all-time high. Even a tweet from a big leader or a new law can move Bitcoin very, very greatly. That swing is why crypto is called volatile. This just means that values can rise or fall very drastically and very fast. The good news here is that you don't need to own one whole Bitcoin. Each Bitcoin splits into 100 million tiny pieces called Satoshis. One Satoshi equals 0.00000001 Bitcoin. Essentially, this means that Bitcoin is divisible down to 8 decimal places, making sure that Bitcoin can be easily transactable on small amounts, dollar values, essentially. And when Bitcoin grows, there's still lots of decimal places for Bitcoin to be able to be transacting with just a few dollars. Most apps let you start with just a few dollars, whether it's $5 or $10 as your entry investment. And because Bitcoin trades 24/7, the price changes all the time. So watch it very closely and never invest more than you can lose. But this is just great investment advice in general. You have to be very risk averse and not overinvest amounts that you are scared of losing and would really need if it was gone. On the other hand, there are very many great reasons to be invested in Bitcoin, and that's why there are so many big companies and big investors doing so. The first of these big reasons is because Bitcoin is scarce. As I mentioned before, the code in Bitcoin, the Bitcoin ledger, forever has limited it to 21 million coins. So you can see it as digital gold, as I mentioned before. Secondly, Bitcoin opens finance and investing and putting the power in your own hands to nearly anybody with a phone. You can download the Coinbase app, the Crypto.com app, and many other places to buy Bitcoin. Just right on your phone, make a purchase with your US dollars, and you're set to go. You can transact that Bitcoin on the blockchain, send it to any address you want, and be within the ecosystem. And at that point, your Bitcoin is in your hands, especially when you put it in a cold storage wallet. But essentially, that gives you full ownership of your Bitcoin, just as if you have cash, which is very different from the banking system. When you have money in the bank, it is not in your hands. Chain analysis shows that Eastern Europe moved $499 billion in crypto in one recent year, while the Middle East and North Africa moved $339 billion worth. This proves a very real world use for Bitcoin beyond just the rich nations. The third big reason why there's a lot of investor trust in Bitcoin is because Wall Street is already stepping in. On January 10th of 2024, the US SEC approved spot Bitcoin ETFs. I talked about that a little bit before. These are funds that let you buy Bitcoin directly like a stock. You don't own the Bitcoin itself. We don't need to get into that too much, but essentially this is giving access for everyday investors an easier path to get there without having to actually be on the chain and having a blockchain wallet and doing all of difficult techie things. You can just use your typical investing app that you buy stocks with. Even BlackRock's Bitcoin ETF has already grown to $20 million, now the world's largest Bitcoin fund. So scarcity, global inclusion, and mainstream investment tools are keeping believers in Bitcoin very, very excited. Unfortunately, though, the excitement can also draw in scammers. The FBI says that Americans lost $9.3 billion to crypto fraud in 2024, and people over 60 lost $2.8 billion, which is the worst hit of any age group. group. Some of these crimes start with a friendly text that turns into an investment trap scam, and investors call this pig butchering. Other scammers pretend that they are a support chat from someone like Coinbase or Crypto.com in order to steal your private key. That's the secret code that unlocks your wallet and gives them access to transact that anywhere. The good news is that crime is still a tiny piece of crypto use in general. As we mentioned before, chain analysis found only 0.34% of all crypto volume in 2023 went to bad actors, which was down from the year before. So in order to cut risk, use these 3 simple steps. Never share your key with anyone or your seed phrase, and real help will never ask, meaning that Coinbase and Crypto.com are not going to reach out to you asking for these particular keys or phrases. The main way to avoid risk in this scenario is to use these 3 simple steps. Number 1 is to never share your key or seed phrase with anyone. Real help will never ask, meaning Coinbase and Crypto.com and big entities like that are not going to reach out to you asking for that information. Number 2 is to double check the addresses that you're sending your Bitcoin to, as well as the apps that you're using. Only download wallets from official sites, things like MetaMask or Phantom Wallet. Number 3 is to send a small test amount first. If anything feels wrong, make sure to stop and ask someone you trust. Send $5 worth of crypto to a wallet that you want to send it to. Make sure it arrives by checking on the log of transactions. Once it does, you're good. You send it to the right place, and then you can process whatever transaction that you feel like. Stick to these habits, and most of these traps and scams are not going to be something you have to worry about. So after hearing the good and the bad, you're probably asking, should grandma and I grab a tiny slice of this Bitcoin? Well, the way to answer this is what's happening in the market. Number 1, we have the big Wall Street involvement. Spot Bitcoin ETF funds let you buy Bitcoin just like a stock in the real world. These went live in January of 2024, so lots of retail investment can get in through that. Number 2, the largest Bitcoin ETF, BlackRock's IBIT, has already crossed $52 billion in assets, making it one of the world's top Bitcoin funds. Easy access and January 2025's price record above 109,000 keep driving lots of new interest. However, experts are saying that probably cap the amount of crypto in your portfolio to about 5% so that the volatility in the price won't wreck your savings. All in all, here's a simple plan. Number 1 is to learn first. Understand wallets and private keys. Then start small. Buy a few dollars or use an ETF. Then watch how the market moves and keep an eye on things. Then make sure to use very secure platforms, stick to very well-known exchanges or hardware wallets. And lastly, stay patient. Crypto is a long game. It's not a lottery ticket for instant life-changing money. It's just like any other investment. You want to hold it for a long time and watch your money grow. If you want to get started, I recommend checking out Coinbase and Crypto.com. I'll put some links in the description where you can get $50 of crypto just for signing up with those links. And if you already know about meme coins and want to get involved there, check out the link to MoonShot in the description. You can claim some free meme coins just by using that link as well. If you learned something new and enjoyed this video, make sure to hit that like button. And if you want to stay tuned with all things crypto, make sure to hit subscribe. Thanks so much for watching. I'll catch you in the next one.